your company is approved and registered by CRO, they will issue you with a certificate of incorporation. This is a very important document confirming the date from which your company will be formally registered. You will need to show this certificate to any official bodies, like bank when you will be setting up a bank account for your company, lending institutions when you want to obtain a loan or a grant, you need to show it to the revenue office. So it's very important to keep it in a safe place. Number 3, register for corporation tax with revenue office. Once you have received the certificate of incorporation for your company, it is time to register for taxes. Companies operating in Ireland have an obligation to pay corporation taxes as opposed to income taxes for individuals and sole traders. You can use the service of your accountant or tax agent to register the company for the corporation tax, or if you have an online ROS account, you can do it yourself as well. Once the registration process is completed, your newly created company will receive a separate tax identification number. This is something similar to your PPS number, but it will be the exclusive one for your company. You have to use this number in any official correspondence with the revenue and sometimes also for invoicing purposes. Just to mention on this occasion that it is worth to consider registering for VAT at the same time. I'm going to give you some more information on that at the end of this presentation, so stay with me. Number 4, taxation of company profits and your income. This is very important to understand how it differs, how the taxation impact, the impact on the bottom line is different when you trade as a sole trader and as a limited company. So as we said already, as a sole trader, you are taxed on all your income, and it means that in many cases you will pay the income tax at a higher rate of 40%. It's actually quite common. Once, as a limited company, you can benefit from a low corporation tax rate at 12.5%. When doing business as a sole trader, your company and you are one body, as I said several times. So any money that you take, that the business earns, are deemed your own income. It doesn't matter if you take it from the business or not, it is your income, and you will be fully taxed on it. On the other hand, any profits earned by a limited company are not automatically presumed to be your own profits, even if you are 100% shareholder. The income you will be taxed on is the salary that you take from the business and any dividends that you pay to yourself. In the first years of trading, you don't usually decide to pay yourself huge amounts of money. In many cases, you don't take any money at all, but you rather invest in your business using your own money. So in this case, you are unlikely to pay high taxes on your own income. There are many ways to optimize your tax savings when you trade as a limited company. As a company director, you can claim certain business expenses, like, for instance, travel, mileage, accommodation, office supplies and equipment. You can also give a loan to your company and then take the repayments free of charge, free of tax. It also works the other way, when you borrow money from your business. Another very important benefit of being a company director is an option to set up a pension fund. The company can pay certain pension contributions to your pension plan, and this is a tax-deductible expense. You will also save a lot of money on taxes when you decide to use your pension. Let's move on to number 5, limited liability for business debts. We already touched on that. I will just highlight one more time and again,